People are screaming, buy heavy. But have you actually looked under the hood? There's a 13.74 stock floating around finance YouTube right now, and apparently it's going to 100x your money. Bold claims, big promises. But let's take a step back. Because here at the Money Blueprint, we don't chase hype, we break it down. Today, we're unpacking what this stock actually is, whether it deserves your money, and the real story behind this so-called 100x rocket. The stock in question is being hyped as a once-in-a-decade opportunity. And sure, the price is cheap, but cheap doesn't mean undervalued. It just means people aren't buying. The question is, should they be? Let's start with the fundamentals. When you actually dig into the company's financials, a few things stand out. Revenue is growing slowly. Debt, manageable but rising. Cash flow, spotty. And their moat, the thing that protects them from competition, is not as strong as YouTube hype would have you believe. That doesn't mean it's a bad stock. It means it's not a no-brainer. Now here's the real kicker. The stock's recent run-up isn't just about fundamentals. It's fueled by emotion. Retail traders are piling in because the price looks low. But here's the truth. Price doesn't make a stock cheap. Value does. And value is something you have to measure, not guess. While everyone's shouting, buy heavy, no one's talking about risk management. What happens if you're wrong? What's your exit plan? Do you have one? If this is your first time investing, putting 100% of your cash into one bet, even a hyped one, is gambling, not investing. And what about the market context? Inflation is sticky. Rates are still high. The Fed isn't done talking tough. And tech stocks, especially small caps, are more volatile than ever. So even if this company is solid, the environment might work against it in the short term. Timing matters. But let's be fair. There are reasons some people are buying. The company's working on something exciting, a product that could disrupt a sector. Are you okay holding through volatility? Do you understand what the company actually does, not just what Reddit says it does? And can you afford to lose this money? Because if you're chasing 100x returns, you better be prepared for 100x risks too. So should you buy? Maybe, but don't do it because someone yelled into a mic and waved a candlestick chart on screen. Do it because you understand the business, the market, and your own risk tolerance. That's how wealth is built, not through hype, but through clarity. Thanks for watching the Money Blueprint, the place where we cut through the noise and bring you honest finance. If you found this breakdown helpful, hit that like button and share it with someone chasing the next big stock. And hey, subscribe, because next week we're covering the truth behind 20% yield investments that billionaires love but never talk about. You don't want to miss that. This is the Money Blueprint, and this is how smart money moves.